Hey everyone, Brian here. Today we're diving into a big question. Where are mortgage rates headed over the next 5 years? This, of course, is the number one question I get from clients and real estate agents. And while none of us has a crystal ball, we do have some solid data from economists, government agencies, and even AI models to help us kind of figure it out. So let's break it down together. But before we dive in, if you find this helpful, please hit that like button and subscribe so that you don't miss any future videos. Let's dive in. First, it's important to know that mortgage rates are closely tied to the 10-year Treasury yield. They don't move perfectly in sync, but they generally do follow the same direction. There's always a spread between the two. In recent years, the spread has been about 2.5 percentage points, but historically it was closer to 1.5 to 1.7 points. Now, what do economists say about where the 10-year Treasury is headed? Well, Deloitte expects it to hover near 4.5% through the rest of 2025, then decline to about 4.1% by 27 and stay there through 2029. Goldman Sachs analysts agree, pegging it at around 4.1%. The Congressional Budget Office projects 4.1 by 2025 and sliding to 3.9 by 2029. In short, pretty stable and a slow and modest decline. Here's something I want to hear from you. Do you think mortgage rates are being artificially kept high by lenders taking extra margin? Or do you trust these forecasts that say it's just the bond market at work? Drop your thoughts down in the comments. This one always sparks a great debate. So if treasuries stay around 4% and the spread remains 2.1 to 2.3, mortgage rates are likely to remain in the 6.2 to 6.5% range over the next 5 years. For example, on August 14th, the 10-year Treasury was at 4.23% and mortgage rates were at 6.63%. That's a spread of about 2.3 points, right in line with the current trend. So what does this mean for actual mortgage rates? Well, in 2025, expect 6.4 to 6.6. By 27, rates could dip slightly to around 6.2 to 6.4. Through 2029, we're looking at the same 6% range, barring any big shocks. What about the dream of seeing 3% mortgage rates again? Honestly, none of the forecasts show that. It would take a massive event like a Great Recession or global pandemic to bring rates back down that far. Of course, these are just estimates, and there are a few things that could throw this off. For example, a deep recession driving treasuries lower, the spread between treasuries and mortgage rates shrinking, or any major Fed policy changes. So while the forecast is steady, we always have to leave room for surprises. Here's the bottom line. Mortgage rates are likely to stay in the mid-6 range for the next 5 years. If you're waiting on 3s or 4s again, that's probably not realistic. So the smarter question isn't when will rates drop, but how do I get the best rate available right now? If you want to explore strategies like buy downs, lender credits, timing, or whether an adjustable rate mortgage could make sense for your situation, reach out and let's talk about your options. And don't forget to like, subscribe, and join the conversation in the comments down below. Thank you for watching.